Welcome to Create Your Vibrant Life podcast. This is your host, Padma Ali. I have a very, very special guest today. His name is Erik Dodds, and this is all about, since we are talking about money and wealth and finances, so I have a very, your mind is going to be blown away by what you're going to be hearing from Erik. So without any further delay, I'm going to hand over the mic to Erik. Erik, would you mind introducing yourself and we can get started?
Sure, no problem. Thanks, Padma. That's some fantastic, wonderful introduction. Setting the bar high here, so we'll hope not to disappoint. As Padma said, my name is Erik Dodds. I'm a financial advisor. I wear a few different hats, but primarily speaking, a financial advisor. I'll tell you a little bit about myself and how I got into the business, if you don't mind, Padma. I'll kind of tell you the story.
I would love that. No, that's great.
Yeah.
Yes.
So I got into this business probably it was around 2001, which was an interesting time for those of the people who recall what the stock market was doing back then. Then there was a big market crash, the dot-com bubble was bursting, everyone was freaking out. So that was an interesting time to start talking to people about their money when I first got into the business. But I was really fortunate. I had studied under a bunch of financial advisors all across the country. So I was really, the position I was put in, I was very blessed. I can say that without a question. And it built a really good foundation for what I was doing. And I ended up teaming up with a partner of mine, or an advisor that I was working with. I was based in Southern California. He was in Las Vegas, Nevada. I ended up teaming up with him and ended up, when he retired in 2008, bought his practice out, and kind of the rest is history. It's been building since there. But that's kind of the front end of the story. The back end of the story I like to tell people is really, I got into this business, I was about 5 or 6 years old. My grandfather, we called him Papa, so Mama and Papa, they were from Ohio. They used to come out and visit us all the time and visit our family in California. And when they would, Papa and I would really do one of two things. I was either playing cards, as you would think a 5-year-old kid would do, go fish or whatever it may be. You have kids, so you know what that's like.
Yeah.
Or he would sit me, and there's pictures of me sitting on his lap, like reading the business page. He would open up the business page and he would be explaining to me what stocks were and how all that stuff were, dividends and I didn't realize it then, but it certainly did sink in, and it was something I enjoyed. The thought of, if I owned Disney stock, then I would be like Mickey Mouse's boss in a weird way. Those kinds of things were fun to me. So I joined the military when I got out of high school. I joined the military, and then spent some years there, found myself educating my shipmates on different things. They'd always ask me questions like, what's mutual funds? What's this? What are you doing? How is it you have money in your pocket to go do things you want? And, we're living paycheck to paycheck. And so enjoyed giving them advice, and realized that kind of, what Papa had taught me kind of set in, and, enjoyed giving them the advice when I was in the Navy. And that's when I got out. That's when I jumped into, I got kind of recruited in by a family friend who was in the financial services business. And that was at around 2001 time frame. So a lot of fun. I say realistically, it was a family friend that got me in the business and said, hey, you should start doing this. But it was really, I think I look back at Papa, and he was the one who really kind of instilled it in me at a young age that, this is investing and this is how it works. And I loved it. I'm a numbers guy, so it was a lot of fun for me. So.
Erik, I love that story, and I love that story for many reasons, because what you're talking about is how early these things start, right? And I remember growing up very, very, like, money and me were like this, like, all I remember from my parents is like anxiety and worry about money. They would never say anything, but that's what I picked up. And then I got married to Asad. We've been married 22 years at this point, and he is such a numbers guy. He loves numbers. And I see my son, who's around 7, he loves numbers too. It starts so young. And
Yeah.
I talk a lot about mindset work. And so this is so interesting, like, to see like how early we can start normalizing money and like having fun with money. And it's such a beautiful story. Love that.
Thank you.
So
Yeah.
Thank you for sharing that.
Yeah, no problem.
And one of the reasons I wanted to have you on this podcast, because we work with you, and like I said, I was so anxious about money, and you have really made it so easy So easy. So can you share with us like what makes you different from other financial advisors out there?
Sure. Well, I think there's a lot of guys and gals like me out there. I think it's a great industry to be in. I think in the beginning, the other half of me, I've got half of me is, got the engineer from my father and the number stuff coming from Papa. And the other half is, my mom is an amazing, caring person. So I think some of the stuff that she put into me is in there, right? Where caring about the individual and wanting to educate and help them. So I guess I would say if I had to be pinpointed, one of the things that does separate me is I really love enjoying educating. And you and I and Asad have been on sessions before. So I think you've seen that where, I like to go into the educational part of it, and I get fulfillment from people, the lights turning on, right? When you're telling me like that you kind of used to get anxiety around money, and now it's like you're eager to be on the calls with us and to be involved with it. That's a win for me, right? That's what I absolutely get. That's the fulfillment for me in this whole process. Because in the end, as an advisor, obviously we're in business. There's obviously a goal that we want to be profitable and make money and help our clients. But in the end, the money part comes along for us, right? I've been doing this almost 20 years. If you do right by people in the long run, you will start to see the rewards and flourish the money part. So I don't know if that's everything that separates it apart, but that
It
certainly is one of the
definitely
things
does.
for me. Yeah,
It
I mean
definitely,
that's
because we have worked with other financial planners before, and I never wanted to go to any of those meetings. I would go there, my eyes would glaze over. I would be like, I don't want to be here, like, get me out of here. But with you, you're absolutely right. I want to sit in on those meetings and I want to learn more, and I'm excited. I'm excited to see what's possible for generational wealth for our kids. And that's one of the reasons I was like, wow, I have to have you on this podcast.
that's
You
awesome.
really you stood out for me, and you made it so easy. So that brings me to like one of my interests is, and I want to share this with my audience too, about generational wealth, like how to get your money to work for you, because I think that's what you're good at.
Thank you. Yeah, I mean, there's a few different things out there. So first off, when you're working, let's just say with an advisor, whether you're doing it on your own, however you're going to go about doing it, because I realize, I mean, advisors can't work with everyone. There's some people who are going to do things on their own. And I'll even break down later if we get into it. I can kind of break down a model that we work with, because you work with a tax firm and a legal firm that I work very closely with. And they have a very good system of they're very into educating their clients on generational wealth, right? And they like to bring in financial professionals who can do the same thing, kind of fill in that gap of here's tax, here's legal, here's the advice, give you kind of all those pieces in one. And and so we can kind of talk about the way things are allocated, but I would generally say, generally speaking, what a lot of people lack, and maybe even advisors too, is that they focus on the products, right? They focus on the actual investments, not what the investments can do, or not where those investments are placed for a purpose. So I'm a big believer in you have to have a plan first, right? Because any advisor and any individual in essence can buy, the same stock or fund or whatever it may be. And so you have to understand what you're getting into, and that money has to have a plan and a purpose for it, right? And so that's another thing that I'm a real big believer in and very strict with when I work with clients is we're not going to really talk about products or, investments or any of these things. We're going to focus on a game plan and strategies, make sure that fits for you, and then we can fit the products in later. That's the easy part. So, but as far as generational wealth goes, I do think at any level you can get started, right? It starts by having a plan. And I do believe there are a few pieces of that plan. Look, if you're just getting started in your investment world, you could do little things like, obviously getting your family educated, because education is one part of the general wealth they can't take away from you, right? So that's where I get into the planning part of it. But there are certainly some ways to go out there and get started with the way that brokerages have removed commissions and costs. The entry point now is very easy, right? So you could get on a Roth IRA or an IRA or something like that at essentially little to no cost by opening up just about any brokerage account out there, whether it's Schwab or Robinhood or anything like that. Of course, you want to do your homework on investments, as there's going to be risks to those. Another thing that I think is a really important foundational piece of the plan, because I wear two hats. I have an insurance agency that I own on one side of the fence, and that really focuses on the life insurance, the disabilities, long-term care, those kinds of things that sometimes we overlook. And then I've got the investment advisory practice, which is the wealth management, financial coaching, planning side of it. And so I think that oftentimes the insurance foundation for people who are just getting started can be overlooked, right? If you're just getting started in your family and you're working and heaven forbid you pass away, right? If you don't have that life insurance component, you're going to start the family you left behind, at a disadvantage. So I am a big believer in making sure you've got the foundational pieces done. And the other part of that is, disability insurance, I'm a big believer in too, which is like paycheck protection. So, I believe in you have to have those foundational pieces set up, and you've got to get, the money working for you in those other places that you feel comfortable with.
Yeah, and that's what really stood out to me too, like doing both of it simultaneously. And so if someone were, like you said, like someone's brand new, so where would they start? Where is a good place to start?
Yeah, I would say you find an advisor that you're comfortable working with. The other thing that's very, very important, crucial to it, which I would say when I got started in the business, I wasn't as strict with people getting for me, and that it's much more important now to me, and it's another requirement, is know your expenses, right? You have to know what's going out the door. Your family is like a business operation, so there's checks and balances, income and expenses. And so you have to be very aware of what those expenses are. And that could be sometimes a pretty painful exercise for people to go through, either individually and couples. I mean, I've been in a lot of meetings where you have a husband and wife, and even using you as an example, you got, sometimes one is the CFO and one is the I don't want to know, right? And so and there's a lot of that happens. And so the idea is we got to come together, and this is the honest time where we've got to be like, here's what's going out the door. Here's what's coming in. Are we overspending? Are we under? Where would someone start? They should look at their, the last 6 months to a year of expenses, where the money's going, what's coming in. Is there shortfall? If there's not enough money coming in, can't really save a lot of money at that point. So you've got to start cutting some things off, right? You've got to say, maybe I spend too much, at Starbucks every day, or whatever it may be, wherever that money is going. We all like our lattes, but you get the idea. So you've got to start at the foundational places, and then go from there. And so you can, again, work with an advisor, or there's so much great software out there now, budgeting software and those kinds of things that you can do. So that would be the first place I would start on a plan is, what does my income and what do my expenses look like? And, what do I have left over at the end of the month? And if you don't have anything left over, there's the first place you got to start, right? You got to work on making sure you got that cleaned up. If you do have something left over, then you start working on those other pieces, right? If I pass away, is my family going to be okay? Or do I have that covered? If I become disabled for a year, do I have money, a paycheck, that protection that can be covered? And if you get those things in place, then you can start looking at, okay, now on the investing side, do I have a retirement plan, right? Does my job have a 401k that they offer me? Do they match? Can I put more money into like a Roth IRA? Whatever it may be, whatever those things are. And so you kind of start building it at the base and work up from there, is how I like to see it when people are just getting started.
That's very helpful. So I'm also curious, like if because there's so many financial advisors and planners out there, how do you go about looking to see that that person is a good match for you, or the company is a good match for you?
Interview is one way. I wouldn't settle on one. I would probably go to 3 or 4. I would look to work with an advisor who is a fiduciary. I think that's important. And that's an interesting term, right?
Yeah, if you can explain that, the fiduciary.
Yeah, sure. So in today's society, that's kind of financial world, that's kind of been the buzzword, right? And so think of a fiduciary. I'll use an example that one of my good friends in the financial service world, one of the attorneys we work with, uses often. When you go to the difference between a fiduciary is, think of like a butcher and a nutritionist, Okay. So when you go to the butcher and you say that you're hungry, what do you think that they're going to offer you? Meat,
Meat.
right?
Yeah.
Right. So that's like the broker, right? When you go to the broker, they're going to sell you something that they have on the shelf. That's their job, is to sell you something, and probably sell you something with, the highest commission. The fiduciary is like the nutritionist. They're going to say, well, yeah, a little bit of meat's okay, but you want to have, your greens, a little bit of bread, a little bit of this, a little bit of that. Oh, your cholesterol's too high, we need to fix. So that's kind of the difference. Is it's really the fiduciary is the one who's going to put your interests, right, ahead of their own, which I have always found a little strange that we have to have that term in there, right? Because that's what we should all be doing in this business. But that term there, and that's what it means as a fiduciary, is there, that's the individual is putting your interest ahead of theirs. So that help kind of clarify.
That does. So that
Oh,
does.
okay.
So you're saying interview people, interview different kinds
Yep.
of people, and fiduciary is better than
Yep.
none. Because yeah,
Yeah.
that's what we were using before, and we didn't realize how much we were losing in the process. So this was very informative. Yeah.
Yep. And I guess I would just say, diving a little bit deeper, I'm very clear with clients that we have really two practices, right? The insurance practice, for which in most states, really the term fiduciary doesn't really exist, right? In all fairness, like in the insurance world, there's not really like a fee-based advisor you can go with insurance. And so some advisors will say, well, we don't even offer that, right? That we'll refer that out. And I think that if that's how you run your practice, that's great. We choose to have that as part of our practice, but it's a separate, it's a separate company. Normally the only part I get involved with that, and it's just, I oversee a lot of that, right? I mean, I do the casework for some clients, but some of that I do farm out. And then the fiduciary really comes up in the investment advisory world, whether you're dealing with a broker who, makes commissions off mutual funds and things they sell, that would be more like a broker. Or if you're working with an advisor who's going to build a plan for you, maybe charge you a fee for that. Maybe you meet with them on a quarterly basis, and or maybe they're charging you to manage the assets for you, right? So that's more along the lines of fiduciary. So yeah, interview, ask them how their practice is set up. Are they a fiduciary on the investment advisory side? And then, get into the history about their background and how long they've been doing it. And the other thing I would say is ask them is, what is their process, right? What is their planning process, right? What do they have them outline for you, the steps that you're going to go through if you work with them? So, and then, I mean, there's all kind, you could online, you can kind of Google questions to ask a financial advisor, and some of the institutions out there have even put up a good, couple of pages of questions that you could go through with them as well. But those few things right there, interviewing them would be pretty important.
Yeah, and that's one of the things I've really enjoyed working with you. Is like you give us the entire time. You give us so much time. I was like, oh my God, like the amount of calls we've been in with you, and you've patiently explained. Asad's such a high level thinker, and I'm like literally just starting out, and you have had patience for all of those questions, so which is really amazing. Yeah.
Thank you. Well, part of that may be that a lot of advisors don't like to work with engineer brains, and being that I'm very blessed that I did some engineering when I was in the Navy, and my dad is an engineer. So I actually welcome, what some people would say is a challenge of working with engineers. I actually like working with engineers because their brains do think of everything. So it's kind of like, the challenge of, getting it and explaining it to them is fun. So anyways.
He generally doesn't listen to any of my podcasts, but this podcast he's definitely going to listen to. And I mean, sometimes I'm like, oh my God, like your level of questioning, I can't, like just can't. He's sitting and working with a 750 piece puzzle right now. And I look at that and go like, oh my God, like get me out of here.
I don't want any part of it.
No, he's so detail oriented. So I can only imagine it would be so challenging.
That's good though. That's the yin and the yang that you guys have, right? That you guys bring to it. So you guys are a fantastic team. It shows. You guys have been very successful in your own right. So it's working.
Yeah, it certainly is working for sure. I mean, I joke with him, I tease him. So I'm curious about your process. Like if someone new comes in to work with you, like what's your process like?
Yeah, that's a good. We actually, we clearly state it on our website. If people want to go there, it's canyonridgegroup.com. And it kind of breaks down into what I call like a 5-step process. So really, first part is the discovery process. So when we connect, we have to make sure that we're both kind of, the first meeting usually is we're kind of interviewing each other in a way, is how I look at it, right? I have to want to work with you. You have to want to work with me. There has to be good synergy there, or else it's just going to be a recipe for, I don't want to say disaster, but just there's no sense in if there's not that good synergy there. So at that point, then we go through a discovery meeting where we're getting to, now we've gotten to the past the part of we want to work with each other. Now we need to understand what your situation is, right? So where are you at in life? Again, expenses, income, assets, liabilities, all that on the table so that we can understand your full picture. And I always tell people, you can't give us too much information, right? I mean, this is where everything has to be out there, and we want a really clear picture, because my job is to come back and to give you detailed analysis of things, right? That's what leads into the second step, is analysis, where what we're coming back to after the discovery session is we're saying, here's what we see, right? We see that, we look at cash flow analysis. So what is retirement going to look like, right? If you take these steps, if you stay down this path, what is retirement going to look like? The investments that you have now, what's the fee structure of those? Are you paying too much? What's the risk in the portfolio that you have now? We use an interesting risk analysis software. Actually, it's a third-party software that we use, where we essentially score people on a scale of 1 to 99. So we try and kind of get rid of these more, I don't want to say maybe antiquated or ambiguous terms like conservative or moderate or aggressive, because I kind of learned a number of years ago that one person's conservative might be another person's aggressive. So here we get to take them, and it's, it's a nice little experiment for me, because I get to watch people with their scores come back, and they say I'm really aggressive, and then they may score something that, is not as risk oriented. So we score them on a number, and then we analyze their portfolio representative of that number. So what that gives us is saying, if someone scores like a 41 and their portfolio scores like an 89, their advisor's not listening to them. The expectations are way off, right? And so in a situation like that, when the market crashes for whatever time period it does, that person's not going to be very upset, be very happy with the returns, right? Because they were expecting a more, risked down profile of their portfolio. So that's the analysis. We get, deep into the picture of the analysis. And for me, especially now with a lot of my appointments being virtual, for me, that's usually a two-step process. I found that it's a little bit easier for me to go, I should say, two-appointment process on the analysis. Oftentimes it's kind of one meeting to go over it and another meeting to maybe just get a second run of it. And that kind of blends into the third step, which is the action plan, right? So here's the suggestions that we're going to make that are a bit more, now we're kind of looking at products and ideas, and here's where we may move the money and how we're going to invest it, and how we're going to get you in the right risk tolerance, right fee structure, et cetera, et cetera. And we start kind of a checklist of here's the items that, we are the issues, and let's start tackling them. We don't have to tackle all 10 at once, right? Let's tackle one or two at a time. And, once we start getting a couple of these, maybe 2 or 3 of them go in line with each other, right? So once we solve one, it might solve 2 or 3 other ones. And that leads us into implementation, where we start, putting the game plan into effect. And then the last step of it is a review process, where we're, I will tell clients also that I need you to be willing to at least meet with me on an annual basis, at least once, right? And now it's so easy with technology and Zoom and Google Meet and all that, but just the idea of we need to go over things at least once a year, so that we're all on the same page, and you understand, what the returns are and how things are performed, and how are we looking in the overall game plan of things. So really that kind of 5-step process has helped it to where that, the other thing is, whether I'm running it or when like a junior advisor is running it, like we're all on the same page of the process and how things are going, and what step we're in at. So, if I'm off for a couple of days or something, then they can step in and kind of keep the ship sailing, as that may be.
Yeah, that's very helpful. I'm also going to include in the show notes links to your website and any other
Okay.
place people can find you, for sure.
Sure. Yep.
And I know I had a list of questions. Is there anything you wanted to share with people? Did you have anything in mind?
I mean, if you wanted me to go over a real simple kind of, I mean, I could go over kind of like a general asset allocation if you wanted me to share that on the screen, just something that we do a lot in the classes that we do. A lot of what I do, which is kind of cool, is that I get to do a lot of educational classes. So, I mean, I can do like a 5 or 10 minute kind of general high level drawing if you think that would be helpful to people so they can kind of understand some of the verbiage. You want me to share my screen
Yeah,
and do
that
something
would be
like that?
great. And I can include it, I can upload it to YouTube and we can put in the show notes and people can have a look at that too. But
Sure,
I think
let's
you're going to be talking about it anyway. So even if someone's not seeing the screen, it might still make sense, right?
still set in a little bit. Sure. Yeah, let me share the screen here and then we'll go from there. So I'll move our little picture out of the way here. I guess I'll do my disclaimer that keeps compliance happy about, none of this is going to be investment advice. So you want to make sure that you work with an advisor in that area, educational purposes only. So we got that on the screen, which is good. Now, as I said, and you and I and Asad all came to meet each other at this tax firm that we work with. And
Yeah,
as I
I'm having
mentioned,
him also on the podcast in the month, Toby.
are you okay?
Yeah.
Awesome, good. Yeah. So Toby and his partners are what I would say are visionaries. Like they are way out front as far as the legal and tax world go. They're fantastic. And so one of the things I love about Toby is he has a nonprofit that he started, and he's all about educating people on being good financial stewards with their money. And that's one of the things I do for them a lot is I help run some of their classes. So a number of times a month usually now I'm doing different educational classes on it. So one of the hats I wear is that, so kind of educational consultant. And so on his platform, one of the things that he talks about and that I kind of expand when I'm talking with people is just kind of a general asset allocation model. And this can be looked at in a lot of different ways, but this might help with some of again, you're going to want to work with someone, but this might help you kind of understand where some of the pieces fit in. But it's also going to be different for each individual person, right? So as again, depending upon where the risk is, but we try to break it down pretty simply into really, I would say, 4 little buckets. So you've got kind of your cash and your cash alternative bucket. So I'll say cash and cash alternatives goes there. And usually, generally speaking, about 10% is going to be that bucket. And that bucket can be a lot of different things to a lot of different people, right? So it can be your checking savings accounts, right? You can have your government bonds might go in there, right? So you've got some really looking for secure items that are in there, generally speaking. Now, as I say that, some people like to be a little bit riskier with their cash. And some people will say, well, maybe I'm going to put my precious metals in there. So this is where the alternatives come in. That's where your gold and your silver and all that good stuff comes in. Some people even will, depending upon their risk tolerance, put their cryptocurrency in there, right? Some people put it there. Some people might put it in a different bucket. Another thing that we use a lot of on the insurance agency side, which people often don't understand the way to use it, is cash value life insurance. So we do term insurance, but for people who are looking to build a tax-free bucket of cash, and we do this in our own family as well, is we set up using life insurance as a cash alternative as well. It has to be, I will say that you're going to be, if you seek someone out to do that strategy, you really want to interview the person that's doing that, because that doesn't necessarily mean they're a fiduciary if they're going to put it together. And that's something that, the advisor can kind of control the amount of commission that they get. And if you're working with someone who is very conscious of their clients and wants them to get the most, then it's going to be put together properly. If not, then it could be really that the plan's not going to work well. So that's an area to me that, I'm very passionate about educating people on, that if you are going to do this strategy, which I do believe in, you do want to make sure that you hire someone who puts your interest ahead of theirs. So those are a few things that we see kind of going in that bucket. The other bucket, which the way that that Toby teaches it, is using high quality dividend kings and dividend aristocrats, which are companies that have been paying dividends for 25 to 50 years. So really the high quality, the Coca-Colas, the Federal Realty Trusts, some of those companies, usually putting about 30% in that bucket, and using what he calls a stock market landlord, where you can actually rent out your stocks using covered calls and cash secured puts. So I won't get into that now, but there are strategies out there where you can actually rent out your stocks and generate another layer of income on top of the dividends. So this is kind of like your income bucket, right? And then a portion of the money in real estate, right? And that could either, again, 30%. Again, these are general percentages that we look at. And some of that might be in income producing real estate where you are an actual landlord, right? Whether that's commercial or, single family, those kinds of things, or growth oriented real estate. Okay. And then the other 30%, just being advisor managed, I should say. Can mean a lot of different things to a lot of different people. I'll just kind of refer to this as kind of the growth bucket. Not to say that the income bucket isn't growing with the dividend kings and aristocrats, but what I like to have that bucket be is something that's a bit diverse and different from the general income bucket, right? So we've got some different exposure to different stocks over there. Think of like your high quality value stocks, and the other one is maybe your Amazons or whatever, Teslas of the world, the ones that might be those high growers over the long term. There's all kinds of other products that fit in here. And again, you really have to get to the point of understanding your plan first, making sure that that's going to, fit your income expenses and fill your needs. But this is kind of a general overview that we do with people to help them understand some of the items that are out there and how we may look to break that down.
This is great.
Yeah. Like I said, there's a lot of different places that you can go off of these and look at them. And we get really deep into, when we're doing the one-on-ones, we get really deep into the different investments that fit into these different categories based upon where your risk tolerance is and those and some of the strategies that we do and we employ for our clients.
Yeah, this is so helpful. I know you went through something like that with us too. It's really helpful to even see the visual. I love how you make it so visual.
Thank you.
Visual learners. Yeah.
Yeah, I think I'm that way too. I like to see it. I can learn a few different ways. I can hear it, but seeing it and actually doing it are I think the two ways that I tend to learn a little bit better. So maybe that's why I like to put all my chicken scratch type drawing out there for people.
Yeah, this is great. I'll upload it on YouTube, my YouTube channel, and so people can go there and have a look at this too.
Perfect. Awesome.
Great. So is there more to this, or did you want to?
I could certainly go into more on this. I mean, it's really, this is kind of just a layer of the plan, right? When you look at the overall planning part of it, this is really where you get into kind of the asset allocation of things and how things can be laid out in some of the strategies in there. But again, I mean, growth could be anything like, exchange traded funds. We don't use a ton of mutual funds in our practice. I think exchange traded funds are a little bit newer version of mutual funds. And so we tend to opt to exchange traded funds or individual stocks, those kind of things that we usually find in our practice in this bucket. You have some speculative growth opportunities over here as well. I'm a big believer in using stock options. I know a lot of people get a little bit nervous around options. I do a lot of coaching with people on options, and so I think they are a misunderstood tool. Certainly can be some high risk to them, but once you understand the ways to use options to your advantage, I think they're a very powerful tool. So we do a lot of that in our practice. As far as for clients as well, either educating them on option strategies so they can go do it themselves. If they're not, we work with a lot of people who are interested in being kind of self-directing their portfolios, or at least that's how they come to us initially, with the idea is, they might be real estate investors and they want to learn more about the stock market, maybe do some of that their own, and then get someone else to oversee some of the stuff they're doing. And that's kind of why we break it down like this oftentimes, is some of the money they're working with on their own, and we're educating them on, and some of it we're overseeing on the management side to give them another set of eyeballs. And then we work with some people who say, I don't, I'm too busy to do any of that stuff. That's what you're here for. I want you to do all that management for us. But yeah, it kind of breaks down here. And I've seen real estate, like I said, real estate, I generally will break down into kind of two different subcategories. You've got your income real estate, right? And you've got your growth real estate. So again, kind of breaking it down and diversifying in the different areas so that you've got some exposure in areas that, I often tell people with real estate, I like to see the diversification in things that don't flash across your screen, the price of it like it does in the stock market, right? So real estate, we're not checking necessarily, maybe some people are, but we're not checking the price of the real estate on Zillow every day, right? So it's not something that, we're certainly emotionally attached to the price, but we're not, real estate, that kind of real estate is generally not emotionally correlated to like the stock market, right? Where there are some stock market investments that are real estate that when the market's going down, that real estate may also get beaten up as well. So I tend to like clients that I work with that do have real estate exposure that is kind of non-emotionally correlated to the stock market. Now, if people are just getting started and they need real estate exposure, there are certainly all kinds of, entry-level real estate investments that you can do that would qualify as that. And I mean, I've seen there's so many companies out there now that, offer their services for kind of these all-in-one real estate packages and those kinds of things. And we work with a few of them as well. So, that's what we look for there is what's your tolerance and exposure to real estate that you really want? What's your comfort level with that? And those may be assets that we don't even get compensated on, but we want the package. We want you to be nice and diversified. So I'm going to try and steer you in a direction of, where it makes most sense for you to be based upon what we've talked about. That's really what my goal is, to kind of help get that ship sailing in the right direction. So.
That's been very obvious working with you. I can totally vouch for that. Like, you're so focused on what's going to give us the best returns. That's amazing. So I have a very different question.
Sure.
I'm curious about, I know you have kids, so how do you start educating children around this?
Yeah, so it's a good point you mentioned that, because in my lead up, I talked about my past with my mama and papa and everyone. I didn't, happily married. This is my second marriage, but I have 6 children. So I have 3 kids from my first marriage. Got remarried to my wife Crystal, who is unbelievably amazing, and we have 3 kids together now. So I actually have kids that range from one is 23 years old all the way to one's going to be a year old in about a month. So wow. Talk about having kids over multiple decades. I was that's me. So yeah, how do you get them started early? That's interesting. I've always kind of been the one who I never wanted to be that. As much as I love this and I love this business and I love helping people, I've never wanted to force feed it to any of my kids, right? Now, if you're not a financial advisor, if you're teaching them about educational things, the nice thing is it's not going to look like, oh, dad's trying to get me in the business, right? It's just going to be you want them to be successful. So there's a lot of great information out there. I would say, educate them from like my 17-year-old came to me about a year ago when he got his job and, started asking me questions about Roth IRAs and, different stocks. And so I actually had him run through the process of, you go through and you grade these stocks, right? Pick some companies that you think that you are aware of. So I directed him to not only analyzing the stocks, but having him think of companies, and he'd come up to me and say, is this company public, right? Like, does this company, do they have stocks? So I would direct them to companies, especially when they get, it's a little tougher when they're younger, right? Because they don't maybe have but you can still talk with them about money. And we do with all of them, we, talk about putting the money away and saving it and watching it grow. That if you put your money in an institution and you let them borrow it, they're going to give you interest on top of that. So your $1 becomes $2, becomes $4, becomes $8. When they start really understanding a little bit about stocks and how those work, I think it's a lot of fun for them to think about their universe and have them pick stocks that are in their universe. Because that's what they'll do is they'll think of all the, maybe the video games that they play or the computers they like or whatever it is that they do with their free time. They can look at that kind of stuff in that universe.
That's amazing. That's such a neat, cool way to just introduce them and like not force it. Like you said, if you force, it never works anyways.
Yeah. Yep. Yep.
Yeah,
And
it's amazing. I love that. I love that because a lot of my listeners have children and I have kids, and it's always like I've been talking to Asad saying, they have, piggy banks, but like, how do we really get them interested in this?
Yeah, and
Yeah.
I think point them to their universe and say, have them understand it, and that their money can compound and grow, and make them part of those processes of researching those things. Looking at the companies and you can do custodial retirement accounts for your kids. You can do trust accounts for your kids. You do there's all kinds of things you can do for them, where as a parent you maintain control until they're of adult age. And so, again, setting those things up for them and having them be a part of that process, especially when they get into the younger teenage years and they might get a job. We actually, with the 17-year-old, we didn't even come to, he came to us and said, I want to save 10% in a savings account, and I want, 20% of my check to go to my Roth IRA. So
Wow.
for us, we didn't, I know he's like, well, I mean, and of course he's, living rent free, which is great. But I mean, the idea to just take that, and so when he does go buy something high price, right, we can't beat him up too bad about it because he is saving like 30% of his paycheck. And a lot of that, again, was him, understanding and being part of the process and understanding the importance of money. I think at a young age too, teaching them, when we take them, little thing, you take them to the store and you give them the money to spend and say, this is all you got, right? If you got $10, you can't spend any more than that. This is, so go in the toys, if you're going to do that fit into that $10 range, don't come back to me with something with $12. And, so little things like that we've just done, I think, along the years that have helped let it sink in as far as how money works, and, saving for yourself first, and then put into things that you like and buy at that point.
Yeah, that's amazing. Erik, this has been amazing, really incredible. I'm also going to put in the show notes, but let us know where people can find you. How can they if they want to work with you, how do they start?
Yeah, I mean, the website is, we've got it out there really easy that people can go on the website and submit a request, and we can, get you on the calendar and start going through the process. You can always email me. It's Erik, ERIK @canyonridgegroup.com. But like I said, you can go to, if you don't write all that down or don't know that, just go ahead and
I'll
go
put
to
it in the show notes. So canyonridge.com and Erik @canyonridge.com.
Yep, canyonridgegroup.com. Yep, exactly. Group.com. Yep, it's all good.
Yeah.
All good.
And are you on social media at all? Can people find you on any of the social media platforms?
I'm probably not that great at social media. I mean, I'm on there. I have a LinkedIn. I have a Twitter profile. I have a Facebook, but I'll just say that it seems like with the hours, and I don't have anyone that takes care of that for me. So it's just kind of me that does that part. I'm not overly active in social media. And part of that, I think, stems from with the world that I'm in and the regulatory bodies out there. For me, social media is more of an escape from my world. I'm not out there giving a ton of advice on social media or anything like that. So yeah, I don't do a whole lot on social media, but more than friend request me on, I would say LinkedIn or, Facebook or something like, yeah, LinkedIn is probably one of those ones where I think Erik Dodds, and you look up, I think my profile, if they see the picture on here or whatever, is, pretty straightforward as far as that goes, but yeah.
Perfect. That's great. So any final thoughts?
No, I mean, just again, I love working with you and Asad. It's been a fun journey already, and God willing, we have a lot more years behind us. And it's again, thank you for having me on here. Really, really honored that you brought me to do this, and I hope the little hour that we spent here is able to, give out information to people, and hopefully they can be on, good stewards of their money and build up their generational wealth for
Thank you.
generations to
Thank
come.
you.
Yeah.
Yeah, thank you so much, Eric. This was so amazing. I know, like, I'm positive that this has had an impact. So thank you. I so appreciate this.
Anytime, you know it. Anytime. Thanks, Padma.